Hey there everyone, Happy New Year! I'm Dave Keller with Market Misbehavior and welcome to this video where I'm sharing my top 5 charts to watch for Q1. The end of Q4 was pretty different, right? I would say we had a bit of a course correction, a bit of a retracement from some of the leading names in 2024. Now as we kick off the new year, new presidential administration, new sort of phase of the Fed rate cut experience, I think a lot of investors have big question marks in terms of how they should be positioned and where opportunities may lie as we try to look forward over the next 6 to 12 months. I'm going to focus on 5 charts I'm going to be watching particularly for opportunities in Q1, but I did want to mention that this video is brought to you by my friends at Seeking Alpha. By the way, my own firm is named Sierra Alpha Research, and I did that to stress the importance of the letters S and A, which for me stand for situational awareness, which is a technique you're taught as a private pilot or as a student pilot to improve your awareness of what's happening by always focusing on situational awareness, what's happening around you in the cockpit, outside the cockpit, making sure you are never unaware of things that are happening, because that's where you can get into trouble. And I find a lot of investors struggle to improve their situational awareness. So situational awareness, Sierra Alpha Research, Seeking Alpha, all with the first 2 letters. Coincidence? Let's get to the 5 charts that I'll be watching here, and I'll share with you in a bit a great event that I think Seeking Alpha is hosting this week, where their head of quantitative research is going to be sharing top stocks to watch for 2025. I don't think you want to miss it. So starting off here with Palantir Technologies, PLTR. This would be my first chart to stress. And I would say, listen, with when you think about 2024, even though a lot of stocks had, generally speaking, nice uptrends, there was a generally small subset of names that did remarkably well, right? These are sort of those continuous outperformers, kind of up and to the right, long and strong types of charts. And Palantir, PLTR, which is a software company in the technology sector, strikes me as one of those great examples. And I think when you have a market potentially in transition, which I think we might be, you always want to focus on where, on the previous leadership and see if you see signs of deterioration. Now, from a technical perspective, there's a lot to like on the medium term and long term timeframes, right? Palantir is above 2 upward sloping moving averages as we record this the second week in January. We're continuing to make higher highs and higher lows. And overall, this has obviously been a consistent outperformer, right? You can see the relative strength is consistently strong at the bottom. What concerns me about the chart of Palantir and other leading names from 2024 is they're starting to show quite a bit of distribution toward the end of the year. And you can see here Palantir making higher highs November into December, but lower highs in momentum, right? So while the price is going higher, the RSI is actually sloping downwards. And that is often a great leading indicator of a major top, what we call a bearish momentum divergence. Anytime you see higher prices on weaker momentum, tells me to just take pause and be a little more cautious in terms of the sustainability of the uptrend. Now, what I think you're looking for from a technical perspective on something like PLTR is a confirmed breakdown. Now, there are a lot of things to look for here, and I'll highlight a couple. Number one, do we undercut the previous swing lows? Today, as I'm recording the video, it's down over 6%, so we're starting to trade back toward the previous swing lows. The question is, do we start making lower lows? Do we rally and make a lower high? That would be the really concerning sign, I would say, overall in terms of price analysis. And the S&P 500 itself, by the way, the NASDAQ 100, have both made lower highs going into the new year. Another thing I would look for is a break below the 50-day moving average. Now, most stocks in the S&P are actually currently below their 50-day moving average, although most of them were above there at the end of Q3 of last year. So there's been quite a bit of deterioration in other areas of the market, but Palantir's managed to hold it. So do we see a breakdown below the 50-day moving average, below $65 for PLTR? Final thing I would look for from a technical perspective would be the RSI level of 40. In an uptrend phase, when a market is going higher, when a chart's constructive, the entire range of the RSI tends to push higher, and you tend to see the RSI pull back to around 40 and not much lower during a pullback in a bullish phase. So if the RSI breaks below 40, that just tells you an elevated possibility that we go a lot further to the downside. So Palantir, PLTR, the first chart I would definitely be watching in the first quarter. Second chart, and I would say semiconductors is what I ended up with, ticker SMH. which is a semiconductor ETF. But I really, at times as I was sketching out this list, I thought about Meta, thought about NVIDIA, thought about different sort of leading kind of growthy Magnificent Seven types of stocks, because I think the second big question I would be asking are, do those leading mega cap names do well? But I thought semiconductors might be an interesting one to put in at this number 2 spot, because they are just at the point where they might be breaking out. And I think one of two things probably happens here. Either the SMH is able to push above its Q4 highs, which are right around 260. You can see we're trading up to that level this week. Do we power above 260? Do we challenge those July highs around 280? The bull case for the overall equity markets, I would argue, most likely has to involve semiconductors starting to improve. Now, while leading names like NVIDIA have actually done quite well recently, or did quite well in 2024, a lot of semiconductor stocks looked pretty bad in Q4, right? And KLAC, monolithic power systems, some of those other, sort of the other semiconductor stocks looked a lot weaker than NVIDIA. NVIDIA was actually a positive outlier compared to the average semiconductor name. So do we see a reinitiation of leadership from the SMH? I think that's a second big question to ask. From a technical perspective, it's all about resistance, right? What we call a pivot point around 260. Can the SMH push above 260 and then hold it and make that higher high and then make a higher low? Does the momentum improve? We've stalled out with an RSI level around 60. Can we push higher on stronger momentum? And if those two things happen, I think the relative strength will improve. And that, for me, would be a sign to really focus on semiconductors as a great opportunity. We're going to get to the next 3 charts to watch some different sectors outside of technology to talk to you about. But before I do that, I do want to let you know about a great event coming up this week. Act now, because Wednesday, January 8th, midday Eastern time, the folks at Seeking Alpha are going to do their 2025 investing forum, and on Wednesday, Steve Kress, who's the head of quantitative research there, is going to be sharing the top stocks of 2025, and I'm sure he's going to be using the powerful quantitative models that are built into the Seeking Alpha platform. I've used Seeking Alpha for a while now. I'm so impressed by how they're able to leverage the power of quantitative analysis and put it in the hands of individuals. I used to use quantitative models like this in the institutional world as when I was working for a large money manager. But the fact that you're able to actually use those techniques as an individual and have access to institutional quality quantitative tools as an individual investor, I think that's fantastic. So Seeking Alpha provides those tools too. And besides this event, by the way, which is coming up on Wednesday, January 8th, if you sign up as a premium member today, you'll be able to access that event. And also, I know Steve Kress is going to be releasing a full article, I think on January 20th, where he's going to be talking in a lot more detail about his outlook for the year, particularly some of the stocks that score well on their quantitative model. So if you want to supercharge your portfolio analysis process and start with some really interesting ideas to dig into, I think this could be a really good time to check out their premium memberships. By the way, you can go to marketmisbehavior.com/seeking alpha to get more information and sign up for the premium membership. Besides those great events, the event coming up on the 8th and also the article coming up on the 20th, going in a lot more detail, you also have access to all the other premium tools on Seeking Alpha, of which I am a big fan and would strongly recommend you check them out. 3 things that I love using on Seeking Alpha. Number 1, I mentioned the quantitative model. Their stock screener is powered by their proprietary quantitative model. You can look for stocks that score well based on their model. You can dig into some of the fundamental and technical criteria that cause it to score so well and look at some of the opportunities that may come out. The second thing that I really love are the portfolio tools. For example, the health scores. So yeah, I put a test portfolio together. So this is all fake, holdings. So don't assume anything from what I'm showing you here. I just put some stocks in a list as an example, but you can actually look at an overall health score that is, again, driven by their quantitative methods. You can start to see how analysts covered by Seeking Alpha actually rate your stocks. You can also dig into some of the proprietary ratings, some of the other scores based on valuations and momentum and earnings, and really understand where there could be some opportunities for improving some of your holdings. And as I'm looking here, I'm seeing my quant score a little lower than I'd like. I might want to check out that event on the 8th and see what Steve is going to share with us and maybe find some good opportunities. Last thing I would tell you is their comparison section. I think thematic investing has become so much more widely followed, looking at things like AI or, biotech or, quantitative or nanotechnology, Bitcoin and cryptocurrencies. And Seeking Alpha actually provides a section called Comparisons where they look at some of those themes. They look at stocks in those themes that score quite well. And I think it's a great way to just consider some of the different opportunities, different ways to play different themes that you see as potentially market moving in the weeks and months and years to come. So again, go to marketmisbehavior.com/seeking alpha. And I want to thank them so much for supporting Market Misbehavior in this video. And I would encourage you to check them out. Don't forget that event coming up on the 8th, Wednesday the 8th of this week. So a great time to act today. All right, let's continue on with our next three charts. JP Morgan, ticker JPM. The financial sector I've been thinking about for quite some time because as the yield curve was inverted and then was flat at the end of last year and it is now more normal shaped because the short end of the curve is coming down, the long end of the curve, the longer rates, 10 and 30-year rates are going up. That is making more of a normal shaped yield curve. And for the longest time, as the yield curve has been inverted, that's just a huge headwind to financial institutions. Regional banks come to mind most likely because a steeper yield curve means their core business, which is basically borrowing and lending, is going to be it's a much better environment for them to thrive. So things like the KRE, some of the regional banks like Key, Huntington, Regions Financial, these are things that come to mind as charts that I'd be following. I'm going to throw JP Morgan as the example of the financial sector because I think we're coming out of a period where a lot of people have not been thinking of financials, not been thinking of banks as great investment opportunities, just because other things like growth sectors like stock, technology and communication services have done so much better. But I think we could be entering a period where growth stocks actually lag a bit and things like financials start to improve. But the reason why I wanted to share JP Morgan is it actually outperformed in a quite strong way in 2024. You may not be aware, but look at the relative strength at the bottom. JPM, if you bought it at the beginning of the year, you actually outperformed the S&P through the course of 2024. So I think there's some underlying strength a lot of investors are underappreciating. I wouldn't be surprised if financials are kind of an underweight or non-existent in your portfolio. And if so, I'd be keeping an eye on charts like JP Morgan. Recently pulled back to an ascending 50-day moving average. I'd love to see if we could break out on stronger momentum and improved relative strength. And if so, JP Morgan could provide an interesting opportunity. Chart number 4, Caterpillar. I'm a big fan of what we call infrastructure plays. As I was preparing for the presidential elections last summer and last fall, thinking about the types of stocks that would probably thrive regardless of who was elected president, industrial names, infrastructure names like Caterpillar came to mind. What an infrastructure play is basically addressing the aging infrastructure, particularly in the U.S. When you think about bridges and roads and highways and cities, there's a lot of aging infrastructure that really needs an upgrade. And both candidates really at some point talked about investing in infrastructure. I know here in the Seattle area, they're big on, the light rail system, which hopefully will connect the different parts of Seattle with a, huge traffic issue, hopefully alleviate that a little bit and give us some different opportunities to navigate around this region. I think there's going to be more and more of that in the years to come. Stocks like Caterpillar and others that would benefit from those infrastructure investments come to mind. Caterpillar overall was actually quite strong going into October and going into Q4 is actually starting to improve on a relative basis. It lagged quite a bit, pulled back in December along with other names, but it's currently trading right to the 200-day moving average, which is where it bounced in August and September of last year. A lot of times when you have a longer-term uptrend, you'll find these pullbacks to a 200-day moving average provide some interesting opportunity. I think this is an important chart to watch to see if we get that bounce in Q1, and if not, if we start to break below that 200-day moving average, I'd be immediately keying into those kind of 310, 320 levels, which would take us back to the lows that we experienced in summer of 2024. Final one, utilities, the XLU. Now, utilities ended up being a bit of a growth play in 2024, right? In the spring, we had a lot of discussion about utilities because cryptocurrency mining companies, Bitcoin miners, were taking using a lot of electricity, a lot of energy to fuel huge warehouse-sized mining operations, and utilities all of a sudden became a way to play, cryptocurrencies play AI because artificial intelligence requires a ton of computing power, and a lot of computing power requires a lot of energy, and that energy comes from utility companies. So the XLU sort of mid-year going through the summer ended up being kind of a growth opportunity. kind of tapered off there. And I would say one of the real warning signs that we saw in September, October, and November were the fact that utilities were trending higher on weaker momentum. Go back to that first chart that we shared, the chart of Palantir, and you see a very similar dynamic to what we saw with the XLU in Q3 into Q4. Now utilities are making lower highs and lower lows. The reason why I'm thinking utilities could be interesting now is if the market starts to sell off, if Q1 of 2025 is a little weaker than a lot of people expect, if the fact that the Fed, if the Fed stops lowering rates, if they sort of hit pause on rate cuts and all of a sudden investors realize that's not going to be a tailwind anymore, maybe investors start to get more defensive. And if so, you would probably see sectors like consumer staples and real estate and utilities start to improve. So I think it's an important chart to watch, particularly the relative strength, right? Utilities underperformed in the fourth quarter after outperforming for much of 2024. So Q4 was a period where utilities were underperforming because offense was outperforming defense. One of the great signs I have found confirming a new bear market phase is that defensive sectors like utilities start to outperform. So I am very much watching the chart of the XLU to see if that plays out. What do you think about these top 5 charts to watch for Q1? What would be on your list of top 5 charts to watch? Don't forget to drop a comment below and let me know. Don't forget, by the way, about the special events coming up with Seeking Alpha, their market outlook and great presentation by Steve Kress, the head of quantitative research, on Wednesday, January 8th. Also, a special article detailing the outlook on the 20th. Sign up as a premium member today and you'll have access to both of those great resources along with all the other premium tools at Seeking Alpha. Go to marketmisbehavior.com/Seeking Alpha for more information. For Market Misbehavior, I'm Dave Keller. Have a great one. And remember, it's always a good time to own good charts.